German Chancellor Angela Merkel yesterday stressed the need of the EU to improve its growth and competitiveness as non-European economies become stronger and stronger. The German Chancellor said they all stood for the stability of the euro currency, and a clear example of this is what they handled the recent Greek crisis.
The first thing is that we showed clearly that we all stand for the stability of the euro currency, and the way we coped with the Greece crisis is proof of that. The second thing is that every member has to work in their own country to improve its economic strength in order to make confidence come back.
Merkel made the comment at a joint news conference with Italian Prime Minister Mario Monti in Rome. With many economies in the region are shrinking, European nations are trying to balance austerity measures against badly needed economic growth.
We must improve our growth and competitiveness in a world that has changed a lot, where competitors outside Europe have become stronger and stronger.
Monti said the EU must give the same attention to growth as it has to do the debt crisis. On a proposed financial transaction tax as an alternative to stringent austerity measures, Monti said while it would be an adequate measure, it can only work if enforced by a wide number of countries.
It would be an adequate measure in this historical and financial movement to introduce a taxation on financial transactions. But at the same time, this taxation can be realistic and not a distortion of the global market, but only if it is enforced to a wide number of countries.
In the euro sovereign debt crisis development here, Fitch Ratings upgraded Greece's ratings to B- after Athens has completed the largest debt restructuring. But slow reforms, political uncertainty, and recession could push it back towards bankruptcy. Fitch assigned Greece a speculative B- rating, becoming the first major rating agency to lift the country out of default territory after the debt swap cut Athens' debt mountain by about 100 billion euros, or close to a third. It was the first time Greece's ratings had been upgraded since the debt crisis erupted at the end of 2009, the first Fitch upgrade since 2003. But the B- rating still places Greek government bonds firmly in junk territory. Following the debt swap deal and a new EU-IMF rescue plan, Greece's debt is expected to fall below 120% of GDP in 2020 from 160% now. That is still much higher than is generally regarded as sustainable. Fitch said the agency considered that significant and material default risk remains in light of the still very high level of indebtedness post-PSI and the profound economic challenges faced by Greece. However, moreover, in the near term, the prospect of a general election and uncertainty over the composition and commitment of a new government to the EU-IMF program also poses a significant risk. Greece is scheduled to hold general elections at the end of April or early May. Opinion polls indicate no party will get an outright majority, and many voters are tempted by anti-bailout parties. The Conservatives, who are in a coalition government with socialists and are ahead in the polls, back the bailout but may seek to renegotiate some of it. The three major rating firms have repeatedly slashed Greece's ratings throughout the debt crisis, cutting it to default over the debt deal in which private bondholders lost most of their investments in Greek government bonds. Fitch's new B- rating has a stable outlook, indicating the agency is not planning to change the rating again soon.
Well, for gold, it fell to the lowest price since January after Federal Reserve policymakers raised their assessment of the economy, signaling the monetary stimulus will not be expanded. Gold for immediate delivery fell 1.8% to $1,670.15 an ounce at 3:53 p.m. New York time, after slipping as much as 2.2% to $1,666.13 US, the lowest since January 25th. The Federal Open Market Committee said in a statement that the labor market was improving. The dollar climbed against a basket of major currencies, eroding the investment appeal of gold. On February 29th, the spot price of the metal plunged 4.9%, the most since December 2008, after Federal Chairman Ben Bernanke dampened speculation that a central bank would take new steps to bolster liquidity. Gold futures for April delivery dropped 0.3% to settle at $1,694.2 an ounce. On the COMEX in New York, in electronic trading after the close, the most active contract fell as much as 2.2% to $1,662.1, also the lowest since January 25th. Silver future for May delivery rose 0.5% to close at $33.581 an ounce on the COMEX. On the New York Mercantile Exchange, platinum futures for April delivery gained 0.4% to settle at $1,701.8 an ounce. Palladium futures for June delivery climbed 0.7% at $708.85 an ounce.
Joining us right now is Tipa Nawawattanasub, the CEO of YLG Bullion International Co. Limited. Good afternoon, Tipa.
Good afternoon.
Good afternoon, สวัสดีค่ะ
Well, Tipa, with China now filing a deficit, how has this issue affected the gold price falling? As well as this issue, does it have a sustained implication on the price of gold?
Because of the China has been lower its GDP forecast, and also because of last night when there was an FOMC meeting, and then when the central bank of US said that they will still target the Fed fund rate to the range of 0 to 0.25%, because of the lower borrowing cost is important for the stimulus US economy. However, Fed believes that the US economy will be able to grow moderately, and because as we can see that for the previous 2 weeks, the numbers of unemployment rate and non-farm payroll is become better and better. So from this announcement, the investor expect that the U.S. economy start to be strengthened, and then that will affect the negative effects on the gold price. So after the last night announcement, there was a big drop in gold price from the level of $1,700 per troy ounce to the level of $1,660 something per troy ounce. And this morning it's bounced back to the level of around $1,680 per troy ounce. And however, because of the last night, the gold price made a new low for this week. So the trend for this week is probably see a further drop in gold price.
I see. Tipa, is it expected that the U.S. Federal Reserve would make no change to the monetary policy?
This one expect, but then we expect that they will have some announcement about the monetary policy, especially about the quantitative easing for the next quarters around April, because we believe that Fed, they might want to see certain numbers and then make sure before they do the next move, and then we'll see like they might still have the quantitative easing, but then the numbers of the money that they will inject will be lower than the first they expect. But then we still have to wait and see for the next quarter around April for the meeting.
Well, now that gold price is the lowest since the early of this year, could you please give us a summary of the gold price movement towards the end of this week, please?
Towards the end of this week, we see a lot of sale last night. So within this week, we might see some bounce back of gold price, but then maybe it will not or reach above the level of 1,700 should be the support for this, should be the resistance for this week. And then we probably see the low to the level of the worst case would be around $1,620 per troy ounce. So we recommend investor when there is a bounce in the gold price to the level of near 1,700, that should be the sell level, or at this current level at the level of $1,680 per troy ounce. If there's still make some profits, we recommend them to sell off and then wait for the drop to the level around 1,650 or below to be the buyback level. This is just for the short term. However, for the medium term and long term, we still believe that this year at least, the high for this year at least has to be the same as last year to the level of $1,920 per troy ounce.
Right. Thank you very much.
Yes, Tipa, thank you for joining us.
Thank
Bye.
you.
Well, 4 U.S. financial institutions, including Citigroup, have failed stress tests designed to show they could withstand a financial shock. The Federal Reserve said Citi, SunTrust, Ally Financial, and MetLife failed to show they have enough capital to survive another serious downturn. Citigroup is the third largest U.S. bank. The majority of the 19 tested passed. The Fed tested the bank's ability to withstand a similar crisis that triggered a rise in unemployment to 13%, a 15% fall in share prices, and a 21% drop in house prices. Their strength is assessed by the amount of buffer best quality assets known as Tier 1 capital they would hold if such conditions occurred. The regulators said Citigroup had a Tier 1 capital ratio of 4.9%, with Ally Financial and SunTrust at 4.4% and 4.8% respectively. MetLife had 6%, although it was measured slightly differently to the others. The banks with the best ratio were Bank of New York Mellon at 13.1%, State Street on 12.5%, and American Express at 10.8%. The Federal Reserve has been conducting stress tests since 2009, but these were the first where results were made public. The Fed was expected to release the results of the tests on Thursday, but brought them forward after J.P. Morgan said on Tuesday it had passed the test. J.P. Morgan's shares rose 7% after the news, while Citibank's fell 4%. The Fed wants banks to show they could not only withstand a future crisis, but could keep lending, unlike the freeze of the credit crunch of 2008, which deepened economic pain. But experts remain skeptical about how effective these tests are in preparing banks for future crises.
Let's take a look at the U.S. presidential race here. Rick Santorum has won the Republican primaries in Alabama and Mississippi, a dramatic two-state sweep on a night when early expectations favored Mitt Romney in Mississippi. Prior to the elections, all 4 candidates spent time campaigning in the region. Santorum had downplayed his chances of sweeping the night like he did in February in Colorado, Minnesota, and Missouri, but said it was important to place well in order to carry on. Over the past month, money from super PACs supporting the candidates poured in both states. According to a Bloomberg News analysis of marketing data, the group supplied 91% of the 5,592 campaign ads that aired or broadcast television stations in the 2 states in the past month, with pro-Romney ads making up 65% of all ads. In the days leading up to the primaries, polls showed tight races in Mississippi and Alabama. The Real Clear Politics polling average in Alabama put Gingrich in the lead by less than 1 percentage point over Romney, with Santorum trailing in by just 3 percentage points. In Mississippi, the polling data was similar but much more spottier, with Gingrich leading Romney by 2 percentage points and Santorum by 5, according to a single public policy polling survey. Republicans in America, Samoa, and Hawaii are also voting today, but results from those contests won't be made available for several hours. Up next is a 52-delegate caucus in Missouri, where Santorum won a so-called beauty contest election last month, followed by primaries in Puerto Rico, Illinois, and Louisiana over the next few weeks.